Hey guys, welcome to another segment of Framing CPA brought to you by Land and Business Accountants. And today I just wanted to share with you a very quick tip that will save you a ton of money. Now, check this out. All right, so this is my mortgage payoff calculator. And what I'm trying to show you today is that just by making a simple prepayment of $100 a month towards your 30-year mortgage loan at a 6% interest rate can save you as much as $582,000 in interest payments, and it would reduce your loan term by 3 years and 11 months. This is huge, guys. Anybody that gets into a regular traditional 30-year loan, which is just about everybody I know, is basically setting themselves up for financial failure. That house, if you're, let's say, an average homeowner and you spend about $200,000 on purchasing or rather financing your home, guess what? You're going to end up paying an astronomical amount of interest throughout the life of the loan, and you're actually going to pay way more than what that actual house is worth in any single form. And so, in other words, $431,000 would be basically what you would be paying, so over double. So what if you cut a few corners and you spread that into, let's say, $1,000 worth of prepayment every month? You'll save a few bills here and there. You'll find ways to save by cutting out something worth $1,000 every month, and you're going to apply that towards your mortgage. Let's see what happens. Holy moly, you're going to save $117,000 worth of interest, and your 30-year loan is going to go down to 15 years. Guys, wake up. If you're getting a mortgage like most of us in our 30s, this literally means that we're going to be paying this mortgage until we're 60 something. And if we got into that home when we're in our 40s, that's right, you're going to be old and feeble and still paying this. So you should hurry up and start prepaying your mortgage now.